What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It's time to celebrate a little bit because it's time for the weekend and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we had Gemini released by Google. Got to talk about that and a lot of other news. Better not waste any time. Kick things off like we always do with Meta Platforms. Start of the week at $316.67. This stock up over 5%. Finished the week at $332.75. Meta, IBM, and 50 other research institutes and other companies like Oracle, Intel, Sony, AMD, and Dell formed an AI alliance where the group of companies will focus on ethical, open, and trusted development of AI technology. Obviously, Meta has been on the forefront of releasing a lot of its AI models to the open source community, and the open source community has found those incredibly helpful. Meta continuing that path. This opposes, or is in competition, I guess, if you will, to kind of ChatGPT, which is considered kind of a closed source model, and certainly what Google is launching and developing as well, those being proprietary to the company and only available to other companies through APIs. Now, Meta also rolling out default end-to-end encryption on its messenger service. It was something that was available for many years, since about 2016, but it was not a default option. You had to default it to encryption. Now your messages are, quote, protected. Now, moving on to Apple, start of the week at $189.54, up 3.2%. To finish the week at $195. We are approaching 52-week highs and all-time highs for Apple, up at $198. Now, Apple halted some production in India. This on its face seems kind of worrisome, but it is due to heavy rains, and we hope everybody involved is safe and sound and maybe a little dry as well. Now, the company is not giving up on India, even despite all the heavy rainfall. The company plans to make 25% of its iPhones in India. That would be about 50 to 60 million of those popular iPhone devices over the next 2 to 3 years. 25% in one country, certainly diversifying a little bit from China. Now, the company is also trying to move India-made batteries into those phones that are made in India. Obviously, you've got India. Okay, the chips have to come from Taiwan. They're usually co-packaged in China, and then the phones that are being made in India, well, all of that is getting shipped into the country of India. Also, batteries, those kind of tech moving all around the different countries. What Apple is trying to do is centralize as much as they possibly can in the country of India, including the battery tech. Now, iPad engineering may move from Vietnam to China. Now, on its surface, this definitely seems like Apple is doing, and it's not just on the surface, Apple is doing everything it possibly can to diversify its supply chain. But one thing that is probably hidden under the radar a little bit is Apple is still working with companies that are still based in China. So, for example, all of this India manufacturing, this is done by Foxconn, which again is a Chinese company. Even this headline is a little misleading, saying that they're going to move their engineering from Vietnam or to Vietnam from China, but they are going to do that through a company that they're already dealing with in China. So we'll have to see going forward. Obviously, as the tensions either grow worse or get better with China, something like this could become a moot point. But even if you diversify out of China, if you're diversifying out of China with Chinese companies, I'm not exactly sure how insulated that makes you if those conflicts get even worse. Now, Apple said to get new iPads, MacBook Airs ready for early next year. This is typical, sometime in very early spring, before kind of the back to school season kind of kicks off. They kick off these new iPads and these iPad Airs, which tend to be popular with college students. Also, the MacBook Air, those will get a treatment of M3 chips. They're also saying that the iPad Pro comes with OLED, which is a certain type of screen technology currently only used on the iPhone. Moving on to Amazon, start of the week at 144, just kind of hovering and hanging out, up about 2% to finish the week at 147.42. Amazon is following Google's lead in chastising Microsoft Cloud. I tell you what, you know you're crushing it in cloud if the companies have to openly chastise you. So last week, I think we had a press release, maybe it was the week before, Google was criticizing Microsoft's anti-competitive practices inside of UK, and now Amazon is kind of following suit, saying that Microsoft makes it difficult or restricts customer choice and makes switching more difficult. The trend, look, I in my job that in the capacity that I have now, I have the privilege. I'm meeting with entrepreneurs, people that are trying to do startups and raising money. I'm meeting with at least 2 or 3 per week. All the technology ones, what I am finding is they're all using AWS, okay? But what they're often doing is siloing off. Maybe it's data storage goes to Google. Maybe some of the AI stuff is done on Azure. What we're seeing, or what I'm seeing, and maybe somewhat different than in the past, is startups and companies are relying on multiple cloud providers rather than having one relationship exclusively. And so I think just rising tide probably lifts all boats. But you know, Microsoft is absolutely crushing it when the competitors have to do this type of thing. Now, Amazon's twitched to shut down operations in South Korea due to high costs. Now, on its face, not a big deal for Amazon, but this is an example. It's something we've talked about on the Amazon earnings videos. This is an example of new, or quote new. Andy Jassy's been in charge for a little while now, taking over for Jeff Bezos. But what we've noted about him is he's consistently cut cost at Amazon and consistently done away with business models that don't make sense. Instead of, like, Amazon could have easily let Twitch continue to run in South Korea, and we probably wouldn't have noticed it as investors, but the cumulative effect of cutting these low profit or no profit businesses actually do have an impact on Amazon's finances, which, again, not a wildly profitable company. And I like the direction they're moving in there. Now, Amazon to stop accepting Venmo as a payment option starting in January. Venmo, obviously a part of PayPal. Probably not a big deal, honestly, for either company. Now, I'm sure there were users at Amazon. Venmo users probably were using it. But you can still there are Venmo debit and credit cards. Those are still going to be used on Amazon. In my opinion as well, there are better ways to pay on Amazon. If you have the Amazon Chase card, you get 5% back on every purchase. There's no reason, if you're doing a lot of purchases on Amazon, to not be using that card. Now, Amazon test unlimited grocery delivery services for Prime members. This is going to be in the great city of Denver, Sacramento, California, and Columbus, Ohio. So don't think this is coming nationwide, but you live in one of those 3 cities for $9.99 per month. And for orders over $35, you're going to get free unlimited grocery delivery from Whole Foods and Amazon Fresh. And my guess, again, with Amazon, they tend to test these out in these markets. If it goes well, this is something that they'll roll out very quickly to other markets as well. Moving on to Netflix. Start of the week at $458 and some change, down about 1%. Finished the week at $453.76. Now, Verizon to offer Netflix and Max, which used to be called HBO, as a streaming bundle for $10 per month. This is an ad-supported service. This is, kind of your telecommunication providers like a Verizon, AT&T, and you have T-Mobile. They're looking for ways to not only acquire you as a customer, but also retain you and keep you from switching to the latest and greatest plan out there. We're also seeing, probably more importantly than that, because that's been kind of the game in the wireless providers for a while. I think more interesting than that is streaming is not profitable. Okay, we're not breaking any news there. Only for Netflix, it happens to be profitable. So what you're going to have to see is a bundling, and we talked about, I think it was like last week, Apple is reportedly in discussions with bundling its streaming service, Apple TV, with Paramount. And so if these things start to combine, that could create some competitive pressures, I assume, for Netflix. Like if Hulu, Apple TV, and Paramount, I'm just throwing out an example here, but if they were to happen to all combine and create a bundled service offering for a given price, well, that could create some pricing pressure on Netflix. It also could make some of these other business models a little more sustainable and profitable, because as it stands now, They are not. Moving on to NVIDIA. Start of the week at 457. The train moving right along. Stock looking great. Up 3.75% to finish the week at 475.06. Now, NVIDIA's CEO says he will try. Didn't guarantee anything. Didn't make any firm commitments. But he's saying he's going to try to prioritize Japan's requirements for AI processors. You got to imagine the demand over at NVIDIA is still strong when they can't go meet prime ministers of countries and commit to anything other than trying. You got to imagine NVIDIA's revenues next year probably going to be pretty damn good. Now, also pretty damn good is AMD. Their AI event brought a flurry of positive reactions. Probably an underappreciated headline was the fact that by 2027, the company initially said that the AI accelerator total addressable market, this AI accelerator is, high-end AI GPUs, essentially. It's going to go, it was at $150 billion. Now it's at $400 billion. Now we know NVIDIA's like running on like a $20 billion clip. We'll give them credit for some more revenue next quarter. We'll just say NVIDIA's going to do $100 billion in revenue next year, which might actually, I don't think that's a problem. It could actually come slightly over that if everything goes well. That still leaves $300 billion, according to AMD, in terms of AI accelerator addressable market there. So this company's looking to gobble some of that up. They held the event. Now, I think on the positive side, you did have Meta there at the event. Meta was kind of talking this up. They also talked up a partnership with Microsoft. Absent from the event, though, was AWS. You would have liked to see Amazon come with some kind of full commitment, be there on stage with NVIDIA holding hands. They didn't. This analyst also noting that Google was absent. Look, Google has their own TPUs, which we'll talk maybe briefly about here. Google doesn't need AMD, but the other providers, Meta and Amazon, in some ways they do. And so we would like to see some buying from Amazon. If you get that, that could be the next leg higher for AMD. Now, all of this AI accelerator stuff is coming at the detriment of cloud, as that is seeing slowing growth across the board. That impacts, obviously, AMD, as they're big inside the cloud. It impacts Intel in particularly, ARM to a lesser degree, although some analysts are seeing an uptick in demand for ARM-based servers. But after well north of a decade of build out in terms of cloud, you are seeing some slowing there. But on the other side of that, I'm not saying it happens next year. It's probably going to be like a 2025 story, is probably a re-uptick, or a re-acceleration might be too strong of a word, but a re-pickup of the demand and the acceleration of cloud. Just your traditional kind of bread and butter cloud services. Taiwan Semiconductor, probably on the back of that previous headline that we had here, also based on some of the demand that we're seeing for the iPhone, basically more or less being flat. Taiwan Semiconductor seeing its sales plunge in November. That was a 15% plunge month over month and about 7.5% year over year, as the demand for AI accelerating chips, while those chips are selling like hotcakes from a sales perspective, part of it is because they are so expensive. And so it is just costing more for a single chip. Taiwan Semiconductor makes a lot of money off of volume, and we're not seeing PCs, iPads, cell phones, Apple Watches. We're not seeing an accelerating demand there. You get any cut of rates, and that could reverse itself. Moving on to the company of the week, and that is Google. Start of the week at 129 and said, bloop, up 5% in a day. End of the week, up about 4.5%. That's after the company showed off a Gemini AI model. It was such an impressive video that I actually took it to a school where I teach finance to on Fridays, and I had to show it to a group of 7th and 8th graders, and they watched in pretty much open mouth awe about what these computers can do. Now, here's the thing with Gemini. The video Google showed was essentially a trailer, very similar to a video game. We don't know the speed and the real-time nature of that. We don't know if those results are repeatable and consistent. I would imagine over time they certainly will. Now, the company, what's really interesting though with Google is they are announcing 3 different sizes of a product. So they're doing that good, better, best business model as it relates to language models. I love that strategy. Okay, so you have the Ultra, that's the high end. That's not going to be available, I think, for a couple of weeks at the earliest. Then you have a Pro model, which is already integrated in Bard. I haven't done enough fooling around with it, but on the day of this announcement, they said it was available in Bard. I have a Bard experiment, and so I jumped in there and I tested it out. Bard got like 100 times better based on this Gemini. So this is a real product. And if the Pro version, which again, I fooled around with for 10 or 15 minutes, it was exponentially better than what they were dealing with prior to that. I am not even going to believe what the Ultra version is going to be capable of. More interesting than that, maybe even, is their Nano version. This is going to be embedded on the phone. What is this going to do? This is going to require a move from Apple. Apple can't sit on its butt cheeks anymore and not do anything as it relates to AI, as Google's going to be able to create a very compelling phone. I think their phone, like, I'm an Apple guy, but to be honest with you, if I had to switch, I would very easily switch to the Google phone. Looks good to me. I've fooled around with it a little bit. A couple of my friends have one. Occasionally, I'm able to thumb around on it, and it is a very, very capable device. And now you're going to run a language model, a Nano Gemini version, natively on that phone. This is exciting not only for Google, but this is exciting for the entire industry, because this is going to require Apple to get their butt in high gear as soon as possible. Now, the analysts lined up and praised that Gemini launches represents, it's tough to say here, maybe an AI computer could say it better than me, significant innovation in generative AI race. And that is where we're at, folks. We are in an absolute race, and I still think we are still in the warm-up phase of the race. The race hasn't even happened, because guess what? Over the next 30 days, what do you think ChatGPT is going to do? You think they're going to just sit around and watch Gemini steal headlines and watch Bard increase its capabilities by tenfold? No, it's not going to do that. It's going to keep pushing forward. Then you have open source models, and then you have other models like Anthropic. It's just going to continue, and very, very exciting innovation cycle that we're in now with technology. Moving on to Microsoft, start of the week at 367. Investors shrugging off the fact that Google's got their act in gear now. Shares of Microsoft up by 1.9%, or 1.86% to be exact. Finished the week at 374.23. The FTC, you make a great acquisition when a year later, the FTC and the CMA, which is a competition and market authority in the UK, they want to come in and start scrutinizing the deal. This is how you made a great deal. Like, they're starting to do, I think like 10 years ago, Ticketmaster bought like Live Nation or something, and now regulators are all pissed about it. There's been other examples like this as well. Very difficult to break up the acquisition after it's already gone through. But Microsoft made a great acquisition there. Now, Microsoft's Copilot to get OpenAI's latest models. Currently, it appears a Copilot not running on ChatGPT 4 Turbo or using its text-to-image model, DALL-E 3. I will say that Bard did not have text-to-image capabilities yet, but I'm assuming that will happen. It's also one of the most fun things to do with my kids, because I can tell my kids, like, hey, what do you want a picture of? And then we type it out, and it's so cool, and we've been having fun doing that. But Microsoft getting OpenAI's latest models, and again, I think OpenAI is going to answer Gemini here very soon. We heard rumblings about Q-Star. I don't think we get a full-fledged, AGI type model, but certainly if that is what is behind the scenes at OpenAI, certainly they can pair and kind of wind some of that back and release something that could impress us even more than Gemini did. Moving on to Tesla, start of the week at 336.94. Boy, I had to squint for that one. I'm getting old. Up nearly 3% to 243 84. Now, India, common topic here. I mean, I tell you what, these mega cap companies, that's where the growth is coming. Their automakers do not want Tesla to catch a break on import taxes. So Tesla's trying to finagle its way into the India auto market without having to set up a local manufacturing plant in order to qualify for import taxes as low as 15%. On the flip side, the government of India has stated for a goal of 30% of annual car sales to be electric cars in just a couple of years. Currently, that level is just at 2%. Also, the challenge here is you have electric vehicle charging. I think if Tesla was smart, they would try to get into it. Look, maybe like I can't control these tariffs, but can you get in there with the charging? Because if you can dominate charging in India, you probably got a pretty darn business there. Now, Elon Musk, iconic Dealbook Summit picture there. He's saying his XAI startup could file to raise a $1 billion equity offering next week. I'll try to get access. I have Twitter Premium. So what I'm going to do is I'm going to compare Bard. I'm going to compare OpenAI. I've got a subscription to OpenAI, and I think I have access to Grok. I'm going to try to create a video sometime next week where we talk about all three, kind of the pluses and the minuses and where we think this stuff is going. We'll do that next week. Now, but Elon quickly denied that XAI is raising any money right now. I don't think he has a need, really. Tesla's China-made EV sales surged 14% month over month, but about 18% year over year. We constantly get this headline at the first of the month for Tesla or any other automaker. In the grand scheme of things, here's kind of a visual, if you will, of Tesla's China-made sales. And I tell you what, you're just looking at, yeah, there's going to be some months that are down, some are up, but for the most part, you're seeing pretty steady demand for Teslas in the great country of China. Now, moving over to the technical segment of the show, we are consolidating at these levels. Couple of things here when you consolidate. What I like to look for is, here's the volume bars down here at the bottom of the screen. When you consolidate and volume starts to head lower, it makes me think this is not strong consolidation, if that's not a technical term, but we'll make that up. But you are still seeing strong enough volume at these levels. So what that is telling you is this is where you would expect sellers to step in. Okay, you're approaching resistance here. You're a stone's throw from all-time highs. I mean, S&P 500 has actually topped out at these levels 3 times over the last year or so. This is where you'd expect sellers to materialize. Fact that you haven't seen it definitively yet is still leading me to believe, considering the mega trend and even the intermediate trend in the S&P 500, it is up. And when the sellers don't materialize at levels where you'd expect them to, well, the dominant trend takes over and pushes you higher. We're also moving into the back half of the year where volumes do tend to dry up. Selling tends to dry up. Wouldn't surprise me if we continue to melt higher, but obviously we'll see what happens going forward. Moving on to Meta. This looks obviously really good. Now, we've been consolidating since June between about 280 up to, we'll call it 330 or so. Nothing has really changed there, but let's clean this up a little bit. I want to show you, while we're not on like a breakneck trend right here with Meta, this still looks really good. You're making higher highs. Again, it's not like straight up in the air like it was, but you're making higher highs. You're also confirming that with like higher lows. This one looks like it wants to walk up this trend line. Any pullback in Meta down here to about 300 is a buying opportunity. Similar setup, although more of a Microsoft-like setup for Apple. You broke to new highs, came back, consolidated around those previous highs. The previous highs are right here at 172, 175-ish. Stock broke to new highs. This is very typical in technical analysis. Anytime you break to new highs, you tend to come back test the previous highs, which weren't that long ago, chopped around, and then finally the buyers reemerged, and it looks like you want to retest and make new highs with Apple. That is a bullish trend. you are buying the dip in those scenarios. Moving on to Amazon, much different situation than most of these stocks. You've got consolidation well below the shares, down here at about $100 per share. More immediate than that, you have consolidation above shares at about we'll call it 60 or 175 or so. Very much like the S&P 500, you are just consolidating at a range. You are not seeing increasing volume, so nothing makes me think that this is going to just bust higher on no news, but also at the same time, not a lot of events can happen to Amazon to push it lower. In fact, if you do dip lower on Amazon, it is likely a buying opportunity. Now, here's a beautiful, this is what you live for when you do technical analysis. I want you to focus on our black box here. That was our mega trend. Then it broke trend decisively, like a solid, very solid, decisive, like multiple red candles. You ended up bottoming out here at 345, but often typical in this scenario, you come back up here and back test a trend. That's why we left this black line in. We've back tested that trend. Technically, that trend is over, but a new one is emerging, and it's between these two red lines. You are still making higher highs, not totally confirmed, but I'll count this almost as a higher high than this. You have one or two green candles here, but for the most part, we've made a new higher high, new higher low. You pull back on Netflix, these areas can be bought down here at 370. You set a stop loss under that low there at 340. You risk, we'll call it 30 to the downside to make a new high at 500. So you're risking 30 to make 140. That is the setup you're looking for right there. And so if you get that opportunity, I certainly will make you aware of it here on the show. Moving on to NVIDIA. This one has been consolidating sideways, looking a little bit like Meta, where you've consolidated really since June between $400 and $500 per share. You just got rejected up here at the $500 level. Pullbacks in NVIDIA can be bought down here at 400. You set a stop loss probably right here at 370. So you're risking 30 to make 100. Moving on to Google. This one also looking very good. Looking very similar to Netflix. We were on a breakneck trend. We broke through that trend. It's also not definitive. You'd like to see a higher high kind of mixed in here. You'd like to see a push to like 145. We didn't get that, but you're still making higher lows. Pullbacks to Google, a really nice area for Google is like 123 with a stop loss at like 120. So you're risking $3 to the downside to make a new high at like 140. So you're risking 3 to make 30. Again, those 10 to 1 setups. You do that enough times. I'm not really talking about as a trader here as well. Some of you guys think I'm talking about day trading here. No, I'm talking about adding to your shares of Google. If you already have Google or you're trying to start a position in Google, these are the areas where you want to do it at. This is where you capture that upside, okay? Because you could have bought Google at the highs here at 140 and you'd be underwater. You also could have bought Google back here at 145. This would have been 2 years ago. And you still would be underwater. But if you'd bought Google at the times where the technical chart told you to buy it, you'd be up 30, 40, maybe even as high as 50, 60% in this one. So pull the trigger, figure out what stocks you want to buy, and then figure out the areas you want to pull the trigger. And when they pull back to those areas, make the move. Now, moving on to Microsoft's talking about making a move. This one looks like it's the only stock out of this group that's still on a breakneck trend. Like Apple, you broke to highs, came back, kind of back tested, consolidating around them, and now boom, you're back on a reacceleration, which wouldn't surprise me if Apple is able to do this, especially if Apple gets some AI headlines somewhere coming across. This looks absolutely spectacular. The dips in Microsoft can be bought. And then finally, Tesla, as we've discussed numerous times, in kind of a little bit, well, it's like Amazon. It's kind of in a weird technical pattern. But if you take off some of these lines, I probably have too many of on here. If you just focus on that, that's a beautiful pattern. You have a low, higher low, higher low, higher highs. Looks like to me, you get consolidation here. Sellers don't emerge. Going to make a new high at Tesla, well north of probably $325 per share. We'll certainly be here to see if it materializes. Hopefully you guys enjoyed today's video. That was the FAANG Stock Recap Show for Friday, December 8th. I hope you all have a wonderful and safe weekend. We'll see you again next week. Good luck with your investments.